Good morning, good afternoon, everyone. Welcome and thank you for joining us today for our webinar, Lease Accounting, Planning for Ongoing Compliance. My name is Brian Seck, and I'm the VP of Global Alliances here at LeaseAccelerator. I want to introduce our panel today. We have Matt, who's our solution consultant here at LeaseAccelerator, and we have Denise, who's our principal over at Scribcor, and myself, I'll be moderating, asking questions throughout the event here, but we're really going to concentrate on what it takes to kind of get compliant, and then we're going to focus on day one, day two later in the agenda as well. All right, so our first polling question. Where are you in your lease accounting journey? So it's an interesting mix. Denise and Matt's thoughts on this. It looks like 25% just started and 21% compliant but struggling, and 34% saying, hey, fully compliant. What are you guys' thoughts on what you see in the market?
I think from what we're seeing in the market, I think the just started people are a lot of the private companies or the not-for-profits and governmental that are really just trying to get their arms around getting compliant with the standard. And I would expect that a lot of the fully compliant are probably public companies that have taken this task on over the last couple of years. The compliant but struggling, Matt, I think you'd agree with me. That doesn't really surprise me too much either, because I think as companies have gone through this, there continues to be challenges in different ways of accomplishing this task. Matt, what do you think?
Yeah, absolutely, Denise. One of the biggest things that we are facing in the market today is folks who have gotten over that initial hurdle of, getting the ones and zeros right from a compliance perspective. But this huge daunting task of sustaining that compliance every single month, every single quarter, every single fiscal period after that, I think a lot of folks during their initial compliance push sometimes underestimated the complexity involved. So no surprises from my end either. Ryan, back to you.
Yeah, and I think also too, the publics, we're gaining a lot of knowledge and experience from what the publics had to struggle through in 2018. So the privates are now kind of facing the same kind of struggles. Some of the areas that we're going to cover today on this are people, process, technology. And I know those are the kind of big three that everyone always talks about. But one other thing I want to quantify here is data. So I think it's people, process, and data is an issue. What I've seen in the marketplace right now, too, is there's two kind of components from the data structure. One is they don't either trust their data that they currently have because they didn't centralize it into a standardized process. So data is going to be not compliant or trustworthy or accurate. And then the second part is companies typically have all the data, but it's set up in different systems and different formats. So it's a question of how do I integrate all of this data into a truth of source so I can make outcomes available for this. So that's kind of the one I would add, people, process, technology. I would add data to that because it seems like a lot of companies are struggling with how do I capture the data or how do I actually accurately map it out kind of thing. So the standards are kind of the highlights. Matt, why don't you kind of take this over? What's the change here?
Yeah, absolutely. Hopefully everybody on the call here is aware that the standards have changed at this point, right? But the biggest, most significant change is that it eliminates, the off-balance sheet accounting for your leases. Basically, you have to go through a capitalization process on calculating a right-of-use asset and a lease liability that will now come onto your balance sheet. With this change, business processes that are already established or created regarding your leases may have to shift, change, or you may even have to create new ones to go ahead and handle this change on a not only one-time basis, but as I said previously, on a going forward basis. Additionally, down here at the bottom, we see that it is a cross-functional approach, meaning that your leases are probably touching significantly more pieces of your organization than just accounting and finance, right? You may have treasury involved in the help with the generation of your borrowing rates. You may have operations or a real estate team who's feeding that data into whatever you're using as kind of a lease repository. Then you may require, inputs from the field when these assets are changing. How is that information going to be conveyed? and done in a timely manner to ensure that this compliance isn't taking the lion's share of your time every single month?
I think it was a real wake-up call for a lot of public companies when they were adopting the standard as to what functions and what people actually touch leases of all different kinds. Real estate tended to be the easier lift because everybody knows kind of where they operate in business. But I think on the equipment side, it was a big surprise for a lot of companies about, who is leasing equipment and putting it through on expense reports with leases sitting in, file cabinets or desk drawers across the world. And it just, adds to that complexity that we're going to talk about here.
Yeah, not just that, but I would say, and this kind of leads into our next point here, who is able to actually sign new leases into agreement? Something that we've seen with a lot of the folks we've worked with is that if you don't have a good handle of the actual leasing process, the lease origination process, you may not even know how many leases are really in existence under your portfolio. So helping to start centralizing that process as well will help in the long run in terms of kind of sustaining this. So when we talk about this increased complexity due to the standard, you're really talking about three main areas, right? The complexity in pricing and contract structures, while a nice benefit to help drive down the overall cost of leasing and make it more of a financial incentive to do so, has ramifications on the actual accounting and generation of those right-of-use assets. So it's no more just make a payment schedule and go from there. All of those lease incentives, for example, brokerage commissions, prepayments or interim rents, those are all going to go into that calculation of the right-of-use asset. Additionally, when we talk about lease events, those are things that now need to be tracked and managed with a lot more scrutiny. When are we returning the asset? Are we going to buy it out? Are we going to renew it? Are we going to renegotiate for more assets? Do we have a master service agreement where we're constantly bringing new pieces of equipment on and removing older pieces of equipment off? All of that information needs to be, one, standardized in the approach that it's being conveyed, but two, documented timely and accurately from an accounting perspective. Statistic out there that came out of a leasing survey that was conducted this past year says that 70% of leases change throughout their lifetime. So that, number in your head, just realize that there is a lot of these different lease events that are going to be occurring, and building out these processes around it are going to be significant, either challenge or a significant lift to get that in place. And then obviously the reporting requirements, this is probably something that most folks are already either familiar with or starting to get familiar with in terms of not only the changes to your monthly journal entries, your monthly reporting requirements, but also your year-end disclosures. What types of information needs to be on those, as well as how is that information going to be, once again, centralized and easily conveyed when you get into that year-end audit time frame. Denise, anything on here?
No, I think you've got it down. I think, the market and a lot of things are dictating, what we're needing to do from a lease accounting perspective, and it's just not easy, and it's not easy for anybody.
Absolutely. So the next point here goes without saying, but leasing has a long-term impact on your financial metrics. All of these different, I'm not going to go through each one of these or we'd be here all day, but all these different metrics now are going to have data points that are being fed in from your lease portfolio, and how well you're managing it is going to dictate a lot of these different ratios we see here. Things like your return on capital employed. How are you executing on the contractual obligations of your lease? How much are you getting in terms of that return on investment when you are actually leasing? The different ratios. Obviously, if you're capitalizing all of these different assets, they stand to change those ratios as you bring them onto the balance sheet, right? So I won't spend too much time here, but the bottom line is leasing isn't, once again, just something that needs to be handled for compliance and disclosures. It also has impacts throughout your financial health throughout the organization.
And so that being said, I want to jump in here real quick.
Yeah, please.
So real life scenario, we have a large healthcare organization that didn't understand the equipment leasing now that they have to be reported on, and when I spoke with the CFO, he had told me that he thought under 500 leases. It turned out to be over 5,000 leases that came up because they are equipment leases, because director and below could approve $50,000 or less on leases, and that was never reported on. So, are you guys seeing this in the field right now, where companies that have to actually look at the equipment piece of the aspect are looking at there's thresholds that they wouldn't have to report on, but now they have to report on?
I'm going to say yes.
Go ahead, Denise. I'll let you take the first crack at it.
We dealt with a public client that really, came to us with help with their implementation and adoption of 842, and they thought they had, a couple hundred, 300, 400 equipment leases. And once they actually reached out and found those leases in file cabinets on people's expense reports and whatnot, they had, tenfold what they had initially budgeted for. So I think that that's a real challenge going through this process, because companies have never had to account for them and track these leases at this level in the past.
So, real estate, pretty much everyone has their hands around it. When you get to equipment, it's kind of the Wild Wild West, especially if you're talking about a global organization that has multiple business units around it. So that is a big pain point we're seeing in the marketplace right now, is when they actually review their leasing portfolio in general to include real estate and equipment. Equipment is kind of the Wild Wild West. They don't know where it really is or when end of term is. So that's a major pain point right now. So anyone on this call should really consider that too as well. The equipment piece of Evergreen is a big deal we're seeing in the marketplace.
Yeah, not just that, Brian, but you made a point about, folks who have the ability to sign leases or bring on new obligations under $50,000. You have to consider things like your accounting policies when we talk about this, right? What is your materiality threshold? What is the materiality threshold that you may have set for different asset classes? You may have a very different materiality threshold for a piece of real estate that has a significantly higher present value or market value than you might for a forklift. So having to go through and determine, whether something is material on your portfolio is also a significant challenge as you go through and just get physical hands on these different contracts. So that's another great point there. So that being said, we'll jump over to our next polling question.
So next polling question is, how much planning for ongoing compliance have you done? I like that only 4.8% are only in denial. So that's a good thing. So it looks like everyone's kind of tackling this project as privates are coming on board. So
I would just offer I think a lot of companies start in denial, and then through their adoption project and that heavy lift that's required for the first time calculations, they realize that it's important and we got to get our arms around this going forward.
Yeah, absolutely. And based on what we're seeing in the market, these are pretty standard answers for what I would expect based on who we're talking to and what we're seeing from them. Most folks are in the process of working through this. Most folks are in the process of trying to figure out the best way forward. And we're probably going to identify some of those methods that folks are using here in a bit.
Yeah. So Denise, I know we talked about people, process, technology, but there's also data around this. And you guys are very close to seeing hey, data should be structured one way, but then when you get it, it's another way. So maybe walk through kind of the challenges you guys see when you onboard a new client.
Sure. So I think when you're onboarding a new client, it depends. If we've been involved in the implementation piece of adopting 842, IFRS 16, or GASB, we can work with them based on what we see with other clients and kind of advise the client as far as what they should capture. For those that are going into this without a concept of what it takes to manage data on the back end, you really have to think carefully because there's more benefits to data other than just cranking out the accounting calculations. I think if the data is structured correctly, you can get some very valuable insights into your lease asset portfolio that can make companies more efficient and ultimately save them money. I think the challenges with data is to make sure that everybody has a data standard that they put into place at adoption, and then really abide by that standard to the extent you can going forward. Because one of the biggest data challenges is going to be inconsistency. The people that are adopting and in that initial lift aren't always going to be the people that are involved long-term in managing the database.
Got it.
Yeah, not just that, but when you take a look at some of these challenges, a lot of them come down to communication. I can't tell you how many times I've sat down with prospective clients and asked the question, so who is responsible for sending you this information? Who is responsible for receiving it? How does that communication flow? Is it always timely? Is it done correctly? And it's generally around that conversation that kind of the light bulb clicks off and folks are like, oh, wow, I haven't even considered that yet. That's something we should probably start thinking about to help better wrap this whole process up. So yeah, definitely communication is a big factor of this.
Yeah, and as much as we want to say the data is important, the process is equally as important from a go-forward basis, because if you don't have a process to wrangle all of your data, all of your leases, your files, the structures throughout a potentially global portfolio, ongoing compliance is going to be very, very difficult if you don't have that process and that communication in place.
Yep, absolutely. And whether or not that process is documented and backed by controls is going to be a huge factor as well.
Yeah, absolutely. So we talk about like this accurate data that's critical. The data points that are on this slide really are the pieces that you need to stay on top of on a long-term basis. But what I think is really important that this slide is going to show you is that not all of this data is going to come from the same group of people. So things like indirect cost and impairment of assets might come from an accounting group, whereas new ongoing leases might come from a real estate group, a procurement group, or other people. It could come from HR if you have apartments or housing considerations for some employees. So all of these data, really the key to this is to find out who is going to be supplying this data and then try to centralize and create a process around it so you don't miss anything going forward.
Yeah, and I have a quick question there because 25% of the poll in the first one have not started this in analysis or engagement to adopt a new standard. So one of the things I wanted to talk about was we are finding in the marketplace right now that there's a real estate group and an accounting group. So how important is it to have the real estate group and the accounting group kind of sync, and even like facilities management, to sync in to make this project successful?
I'll take that one. I think it's critical. I think it's critical, and what we've seen in many projects in doing this time and time again is accounting, because they are responsible for the calculations and the financial reporting. They want to be in control of both the adoption project, implementation of a software solution, and creating the process, because they are the group that needs to sign off on the calculations. However, they can't do it in a vacuum, and they really need the support of other groups and departments around them. And the recommendation, the best practice is if accounting wants to own it, that's fine, but it really needs to be a multifunctional team, because you don't want to have to go through this effort more than once. And if you're capturing data, it should be capturing data and creating a process and a solution that benefits everybody equally. It can't just be an accounting effort.
Yeah, absolutely, Denise. And I think one thing that you really mentioned there, and Brian, you kind of hinted at it as well, was alignment between the objectives, right? So for those folks on here who are still trying to get started or in the process of starting, really think about how you want that kind of back and forth between the different functionalities who are going to be kind of playing into this to look, right? When you're evaluating things like technology to help kind of centralize a lot of these efforts, what types of things are not only your accounting team going to be looking for, but also your real estate team Maybe you may have some folks on your legal team who may want some software or some other sort of process. So really getting all of those folks in the conversation to help develop this kind of roadmap for yourselves is going to really help you long-term from a success standpoint. So, I mean, nothing is really constant when it comes to your portfolio, but change, right? We already kind of hit on the fact that pretty much 70% of leases will change at some point, oftentimes multiple times per year. And here are a couple of different examples to consider when we're talking about this change. The first and foremost, we've already kind of hit on how equipment, especially a global company's equipment portfolio, is constantly in change. But things that folks are often not really considering is where are the actual assets located? When we talk about a case study in a little bit, we'll cover a specific example around how this might function, but keep in mind that while assets are coming on and off your books and balance sheet every single month, every single quarter, having the ability to not only account for them, but also locate them and make sure that they are still in operation or what part of your organization is operating them is just as important. Denise, anything on this slide here regarding change?
Yeah, I'd say I think everybody's aware of the changes that happen in their portfolio, and the one thing that I don't think can be stressed enough is that the ongoing tracking of this is critical. We all understand on this call that initial adoption effort is a project, and I think everybody is going to be in the same boat where they want to avoid a project every single year or quarter or whatever measurement time frame and reporting time frame that you're dealing with. It's really important to get it done right the first time.
Yep, absolutely. And when you look at a couple of these other things that we have listed here, we just saw a humongous shift in a lot of our customers' leasing strategies relating to the economic climate due to impacts from COVID-19. So being able to have processes in place that will allow you to quickly adjust your leasing strategy and even adjust your leasing portfolio depending on how your business needs to function to either stay afloat or to leverage increased cash flow. That is another thing to consider when we're talking about the portfolio changes. What is your overall strategy today? What does that strategy look like tomorrow? What does it look like 6 months from now? And how will that leasing portfolio continue to grow or shrink depending on that?
Yeah, we read through force majeure. I'm sure everyone on the call understands that if you deal with real estate. So force majeure, when China shut down manufacturing plants, that was a big issue because they didn't have their leasing documents centralized in a system. It was sometimes out of a cabinet out of China. So that was a major shift.
So we talk about a lot of remeasurement. I think, COVID changes in leases and a lot of different things that happened over the last 2 years have caused the need for remeasurement under the 842 IFRS 16 GASB standards. Some of those were shifts in rent structure, retailers going from fixed rent schedules to a percentage rent deals, along with, combined with extensions of leases. And others, there were, concessions made by landlords just to keep tenants in their buildings. And I don't think that we're completely through that yet. So, while, we talk about change in the portfolio, there's also change that is affecting the lease accounting calculations, and understanding what those changes are that are going to trigger the remeasurement is why you want to have a software solution to help guide you with that. I think for companies that have portfolios of, I'll say kind of the break point is about 50 leases, to do that manually in Excel is going to be incredibly burdensome and rife for error.
Yeah, I mean, absolutely. Everything you mentioned right there is things that we see all the time. It's not so much understanding when a remeasurement activity is occurring. It's also understanding what the correct accounting treatment for that remeasurement activity would be. So all of these different examples that we see here are different aspects of that. And not only do you need to know that it's happening, but you also need to know how to account for it. And building out a very complicated, robust Excel document that tries to manage this is exactly what you said, Denise, very ripe for error. Any sort of system or technology that's kind of manually driven by humans has that risk factor. So not only are you having to build out that Excel model, but you're also having to then build out controls, which generally means you're having someone manually go back through those calculations every single time an update needs to be made, making sure that all the formulas are accurate, making sure that all the formulas are complete, and anything that's linked is also still linked properly. So it's not just, the calculation, it's also what else goes into that to make it an accurate document.
Yeah, and I've seen in the marketplace too, like a lot of our partners have looked at it as a lease count, like, hey, under 50 leases or under 20 leases, but it really comes down to the complexity of the lease. So if a lease is very complex and you only have 20, you can't manage that in Excel. So we've had a lot of our partners who have said, hey, it doesn't matter about the lease count. It really comes down to complexity of the lease. All right. Which organization or organizations within your company have or will be taking the lead on managing, administrating leases? But I'm wrong. It's C, accounting, by over, close to 70%. So interesting.
I think that goes back to what I said before, is because the accounting groups are responsible for the financial reporting end of this, that they need to, be definitely in the weeds on the numbers. It's just important that I feel it's, critical for them to have a team behind them so these numbers work for everybody, makes everybody more efficient.
They're having to do the month-end close, so it's interesting that they're taking the lead on it. That's very interesting.
Well, yeah, and what I find particularly interesting about this is accounting generally isn't involved too much with the day-to-day lease administration. Maybe the actual numbers and the reporting that needs to be done, yes, but in terms of negotiating the end-of-term events, in terms of negotiating the changes on those leases, that information may be something that your real estate department is handling or your operations team is handling. And accounting, with our experience, is generally the last to know on these changes. So as Denise said, it's imperative that those different functions of your business are aligned in the approach that they are administering these leases, or at least managing the assets under lease.
For sure, which leads us into this, controllers and accounting departments, they already have full-time jobs. I think, it'd be foolish to underestimate the amount of effort that's required to keep this compliance going in the long term. It's much more complicated, I think, than it was prior to the new lease accounting standards, where your lease administration team could just, create a straight line schedule for you on a real estate lease. Your operating leases, unless they were capital in nature, would just flow through to your income statement. There's much more to it than now. I think, for those of people that are in the tsunami of lease adoption, it's critical to kind of be mindful of the project resources, just in the number of people and the total number of hours. What we've seen is that, project plans have, in many cases, doubled or even gone to triple what the initial estimated budget and effort was from number of full-time equivalents and number of hours required. What have you guys seen on your end?
Yeah, I couldn't have said it better myself, Denise. Not just that, but folks are constantly moving around within the organization, sometimes wearing multiple hats. Folks are leaving, coming on within these financial organizations, within the clients that we're working with. And, it's important to try and kind of manage what you've got now and see how what you have now can be utilized in the most efficient way possible.
Yeah, agreed. So that leads into day one, day two. So day one, how we position this is day one was when our publics just had to pick a software and check the box for compliancy. And then day two is actually when they have to actually manage all the processes. And they actually, once you get, it's kind of like if you came off 606 and then you went to 842 adoption, you're kind of like looking at what's the next one? Like, how do I, get better efficiencies within my organization? That's day two accounting. So day one challenges for our organization was like, let's just get compliant, like check the box, and that could be a software. And then we're finding out now from our current client base from 2018, we're getting into the managed services play. So this is a different conversation. So a lot of our clients have come to us now, our big five, I'll put it that way, our big five have come to us and said, I don't have the resources, I don't have the skill set, and I don't want to take on this risk. Can you guys outsource this? And we do this with our partners. So there is a managed services play around lease accounting in general. So I just want to put that out there because I'm seeing a lot of RFPs that come out where they're asking for managed services, but they don't know how to ask for it because they don't know it's available in the marketplace. So this is something that the Fortune 500 is actually leaning towards, is outsourcing the risk, the compliance, the resources, and the skill set around that. And that's a big thing. So I'll switch over to day two because everyone on day one is, unless, Denise and Matt, you have a comment on day one, but I'll go to day two if that's okay.
No, I think the real comment is it's a different set of skills, day one and day two. Day one is all about the project. It's about meeting a deadline, getting our arms around it, and getting it to a point in time. And then day two becomes this ongoing work of how do we roll this forward. And quite honestly, like people that are good at projects sometimes aren't good at ongoing. And people that are great at doing ongoing process aren't always the best positioned to be in on projects. Resources, day two resources is still continues to be a bit of a challenge. We all know that there's kind of the great resignation. We've all heard about that in the news where people are jumping from company to company. And you need to think about that in creating this day two plan. Part of it is just creating that operating playbook. Like, let's document all of the process and procedures around leases of all different kinds in an organization and make sure that we have an understanding of who's executing the document, how that document flows through the system. If it winds up in a technology system or Excel, it needs to get reported to accounting. There's a whole host of issues around that. And it's about protecting companies from, oh my gosh, the two most important people in my organization are the only two people that know anything about leases, and they've decided to move on, right? So challenges are finding and retaining talent, the right talent, and having the right team is super important to create those efficiencies, as well as that segregation of responsibilities, both from internal control perspective that the accountants and auditors are going to want to see, as well as protecting a company from having all of their eggs in the basket of a few key employees. Aside from that, document storage, there is so much electronic document storage right now. Making sure that you have an understanding of how that happens, where that happens, who has access, and how to maintain those documents also. But that also kind of gets covered in that operating playbook. And then making sure that data is up to date, not obsolete. Obsolete data is the death call for anybody that's trying to maintain compliance with lease accounting.
Yeah, and that's the publics. The good thing is for the privates, the publics went through that pain challenge in 2018, and we understand their challenge. But a lot of them are coming out to actually do replacements for technology because the technology didn't handle the process and resources constraints that they needed. So what would be good now next is to show like case examples of like what we've realized from our public so the privates know this so they understand it. So Matt, I'll turn it over to you for the equipment side of it, example.
Yeah, so we have a client with a large portfolio of material handling equipment, such as the forklift we have pictured here. The issue with this portfolio, or the issue that they were facing, I should say, was that they did not know what was coming, what was going, where these assets were located after the lease was signed. they were having a very tough time as well with end-of-term management and leases going into evergreen, meaning month-to-month payments on a piece of equipment after the termination date, because there was just so many forklifts that so many people were responsible for. It was a significant challenge to timely, accurately record all of these different changes. So what they had to go ahead and do is build out a new process around not only how these leases were originated, the master service agreements that were under these leases, or that were these leases, I should say, how many assets were coming and going, the controls behind that to ensure that when those changes occurred, the correct folks on the accounting side of things were notified of it. And what it came down to was utilizing not only the building of a new process that their organization would have to utilize, but also leveraging technology in that process in the forms of automated controls and workflows and email notifications to ensure that, you know, they knew exactly where these forklifts and other material handling assets were physically located, who was using them, and what the intentions were on that piece of equipment when it came down to end of term. This is so critical, I think, because, you know, a lot of folks lease equipment or lease real estate due to a financial incentive that the lease agreement represents. If you're holding on to your equipment past its term, you're now basically eliminating any of that financial incentive. You're incurring non-return fees. You may be paying on a piece of obsolete equipment that you could go ahead and return and get a newer version of. You could probably have or execute some sort of buyout that, once again, still represents that incentive. But if you just hold on to it, you're making monthly payments on that equipment that could go to revamping the equipment portfolio, could go to other aspects of your organization. So having something that helps notify you and keep your team honest in that timely recordation is really key and was a huge part of their success when it came to sustaining compliance.
We had a client that's a retailer that's located across the U.S. With some Canadian locations as well, an inline retailer in many of the shopping malls that were closed down, and basically they were prevented from operating for a period of months during 2020. The pandemic also caused their financial situation to change around because they weren't able to sell, and they were trying to pivot into more of an online or customer service model. And in the midst of all of this, because they're a retailer, they lost some very key people on their team. They were able to work with their landlords to restructure many of their leases to go into a percentage rent deal combined with some term changes, lease term changes. But because of, you know, the staffing that they had lost, they really lost a lot of the expertise in the system that they were using as far as how they had to get all of these lease changes into their system. So what they needed to do, and we had worked with them before, is they reached out to our team and said, look, I have like 300 lease amendments that have to go into the system, and I'm trying to be done before my fiscal year end. And oh, by the way, we're still negotiating with landlords, so not all of this is signed. So in their case, you know, the best things that they had going for them were, A, they were in a system. B, they hired a team that had, you know, manpower behind them, that knew how to work in their system and that could read leases. And then they put in place some future processes and procedures to try to mitigate this should this happen again. So it, you know, perfect example of making sure that you're always looking forward to not get yourself into a jam. And then at the end of the year, because they were in a system, all of those changes that did trigger the remeasurement, because they were switching their rent arrangements, were easily accomplished by the click of a button. So it goes to saying, like, have the software and have the workflows and have that process documented, and it will save you time and angst in the end.
But what a lot of this leads into here is the monthly close process. Now, you can have monthly close that is supported by software, or you can have it done kind of more manually when it relates to your leases. But what's really key around the monthly close is how that basically takes all of those lease events that may occur after the close, and how do you go ahead, summarize the change activity, document it accurately, and update your system of record to reflect those. So having a true month-end close process built out, once again, whether you're leveraging that software or not, keep in mind those different components that would go in. How are you going to handle backdated events? Who is responsible for that? What is the process to go ahead and make an adjustment through your system of record if that needs to occur? And then we get into a conversation around technology. So there is a tremendous amount of different softwares on the market right now that handle this lease accounting compliance. But I think from what we've seen, there aren't as many who really tackle the sustaining compliance accurately, meaning the workflows, the communication, the month-end close that we just mentioned, all of that time and effort savings, all of that control that's laden on top of that. Not too many softwares on the market have that breadth and scope to really tackle the day two. So, being able to automate a lot of the effort that we've talked about through a software is definitely going to save a lot of time. And while, when you look at people, process, and technology, having a more sophisticated technology may look like a higher dollar cost on the front end, you're actually saving a tremendous amount of time from manual effort, manual rework on the back end and going forward. And then Denise, I think you had some comments here regarding the team for compliance.
Sure. So, choosing the right team is obviously a key piece of this, whether you decide to outsource this effort or really put together an in-house team. It's really important that both you try to wrangle all of the process and procedure and knowledge around both the real estate and equipment portfolio at the same time, ideally, because it's going to end up reflected in the same set of numbers that's required by the accounting group. Make sure that you have a team that can accommodate a project if they need to. If there's some sort of a cleanup project or something changes, either COVID-related changes is a prime example, or something changes where you need to do mass changes, make sure that the team has got capacity to take that on. And then make sure that the team is scalable. You need to have the ability to, take on an acquisition in a real estate portfolio or a new master lease with 1,000 assets, if that's how your company operates. And then look for, if you're going to outsource, look for somebody that's willing to customize their services to make sure that they match how you operate. It should never be about how the outsource provider operates. It needs to really fit your particular situation. Then I think we want to just touch real quick on the benefits of sustaining compliance, and I think this is, kind of a group question. The first is better decision making. Really having that data and then putting some analytics behind it will ultimately let organizations make better decisions.
Yeah, and I think I'll tackle the bottom one there of just savings, not just with time in terms of efficiency, right? You're not having your physical human resources doing these tasks as much, but you're also better able to execute on the contractual obligations of your leases. If we recall what I mentioned previously around that financial incentive that leasing represents, having something that keeps you more honest and keeps you more online with when you're supposed to be turning these leases in, when it makes sense to go ahead and buy those out, puts dollars back into your organization's pocket to better improve the business or acquire more equipment, acquire more land. So that savings aspect of managing your leases better through this whole idea of sustaining compliance really does drive savings. Brian, any comments there?
Yeah, I think it's the analogy I always give is real estate's like turtles, right? Everything's like 10, 15, 20 years out, and equipment's like cats, herding cats. So the analogy I would give is if you can get your data around the equipment side of the house, you're going to be much stronger than looking at different business units who do their own kind of processes and things of that nature. I'm a firm believer of centralizing everything. We've had success with our clients where they centralize everything, both real estate and equipment and COE. Even for lease administration and ongoing stuff, like we've been successful, and that's kind of my messaging is like centralize it Because if you have every business unit that does their own thing, then you run into the whole director thing I mentioned before, where you have 5,000 directors that can approve $50,000 or under, and you're in trouble.
Yeah, I would agree, Brian. I think with our clients, we think, centralizing even on a global level if needed is really the way to go, just to get everything streamlined and to make sure that you can manage and handle all activity in all areas.
Yeah, and the other thing I would say too, so like I mentioned before, 10 of our top customers have come to us about managed services, is companies are now looking at leasing globally in general, and that includes all leases. So that's a big differentiator in or a shift that's happened, I think, in the past 2 years, where, with the pre-COVID pandemic, it was kind of like, hey, we have a real estate, we're good, and then every individual business unit did their own thing for equipment. Now it's all lumped into one, and now everyone's doing it from home. So everyone's looking at well, how can I manage this and automate this the most effectively? So I would say take a look at your global leasing process from signing of a lease to end of term of a lease, and you will find many, many areas where you're lacking efficiency. So that's where we're finding the best kind of bang for our buck as a software provider. We're showing ways to automate and improve the process. So if a company actually looks at from here's where we sign a lease and what are the processes all the way to end of term, it's a huge discrepancy between order to cash and end of term and procurement and payroll. I mean, there's a huge discrepancy there. So that's where the biggest bang for the buck is in my mind.
I would agree, and I would add to that initial adoption projects for many companies are showing where the weaknesses or the holes are from an internal control standpoint, and really the ongoing is to try to minimize that, as well as get the buy-in from your outside accountants if you need to make that audit process easier.
That's right. So we partner with a Big Four, so the end game is always like, what's the audit process look like? And it always starts from the start of a lease. So I'm excited about this, the new standard, because it adapts everything with that in terms of processes. And most companies are looking for a handle around it. I talked to a CFO of a large, $3 billion company where when we walked through the process, he literally looked at me and said, "Is that a real process?" And I said, "Yeah, that's your process." So I'm excited about it because more people are getting educated about leasing in general. There's a big dollar amount around leasing. So people are starting to pillar it as a top priority. All right, so polling question 4 is, what are the greatest challenges you face with starting compliance? Just shows the complexity of what we're doing.
Yeah, it just goes to show everything that needs to go into and the thought that needs to go into both the adoption and the compliance topics.
And I just want to say on behalf of everyone at LeaseAccelerator, I want to thank you and time for taking the schedule to attend. I want to thank Scribcor as well for attending today as well.